Welcome to the Twomey Stock Market Report. I'm James Twomey, and today is Monday, 6/27/2022. All right, want to do a quick analysis. Going to start with our sector table. Let's go live on Schwab Street Smart Edge, and then we look at the last. We always look at the year to date. Year to date, the number one has been energy, and it's come down quite a bit from the 40 some odd plus percent down to 22. Everything else is in the red. The second place was healthcare, utilities, very defensive sector. We look at the last 5 days, which we don't like to trade the last 5 days, but it gives us an analysis of since this is a bear market bounce the last week, and it's a holiday week, there's a good chance low volume, we can drift higher. Healthcare is way up at 8.5%. And if we break out healthcare sector even further, we break it down, not surprisingly, but healthcare providers or managed healthcare are the two highest. If we break out managed healthcare, what comes right away is UNH. That's one of the ones we talked about early on in our segments. If you go back, you can see some of those segments. But where are we on UNH? UNH on the daily chart has crossed its inflection point of the 9 crossed over the 14 EMA. MACD and the stochastics are up, so that is our all-in signal, right? The reason why I didn't, remember we talked yesterday segment, I didn't kick off a buy there because it had a negative day on and a large high volume negative day on Friday. I'm not sure what that was about. I tried to do some detail. I didn't see it. Some people are advocating a avoid on this, and it's a high price stock. So let's add a third, and we're going to put our. Do I have a stop here? We're going to add a third, and let's see where our stop is for UNH. I don't have it in here. Let me just bring it up to the. If you do buy tomorrow, you want to put a stop right at that 9, which is 487.7. So take a nibble there, and let's see where that takes us. If it blows up, we'll be out, and it does. It does have some, history in our discussions there. It's well above the 200 EMA, but that's way down at 471. So there's a 20. You'd be at a 25, 30 point loss there. So we've got to be cautious with that one. Add back to Verizon. That is still came back, crossed above in the 9 and the 14 EMA as well. We got our second day confirmation, and today a third day, and it stayed above the 9 EMA. So it's pulled back with some decent volume, but on the other hand, they believe what we said yesterday was it's bouncing up against a 200, and now it's bouncing above the 9 EMA. So it may be range bound here for a while, and we can certainly add a third to a half more. Once you do that, you want to get your. Now, since the first third we were holding, we're waiting for an inflection point. That one you want to put a stop at, I'd say 50.3. Okay, and let's see what else. Okay, now we're going to go into the world of we're going to go to our existing ones, but right now, mouse hunt, and use caution on this. Reason why? What's a mouse hunt? Mouse hunt. We're looking for something that we're off for a big game. And then often we end up with a little mouse. What I usually do for this, in a bear market bounce, or the opposite, if we're in a bull market and we're getting a little bit of a pullback, to play that bounce, I try to look at the 120 minute, which is breaking up the day into 120 minute segments, a little faster inflection points, and it gives me an earlier predictive of what may be transpiring for the daily. So ILF, which we've been in before, it's our Latin America commodity type play. It's an ETF. Well, I looked at the daily. We've got like from the world of Fibonacci, we went down from point A to point B, then up to C, and then C to D, and both A and B equals C and D. So we've completed that in 1-to-1 Fibonacci retracement. It can go further than that, certainly, but usually it's a good buy point, and we're going to take that risk here, and then we got a stop that we put down quite, right at that last low. It does stochastic is just starting to turn up. We'd like to see that up really at 67.70, but this is the daily now, so the daily is not giving us a signal, and you can see the 9 is well below the 14. So if we go to the 120, and this is where the mouse hunt comes in, the 9 just crossed above the 14, or it's touching, and then see the stochastic, our fast oscillator, up over 75, up over 70, and very green over red, and then the MACD went green over red for some time, and it's hanging in there, still negative, but it's showing positive inflection. So the goal here is to ride this to the next at least 0.236 retracement, and then potentially 0.382. But I would say it probably would stop on the 120 near around that 50 EMA. If we do get the bounce and it continues, you might be able to get it up to the first 9 EMA, which is 23.4. This is the daily now, and if it's so you get a couple. There's a potential for 1 or 2 points here, but let's see what this risk on the downside for the same. So add a third there, and we'll see where that goes. Put your stop at 22.36. XLE. I mean, I would do this unless we wake up tomorrow and the stock market's, showing negative 400 points or something at the open. Then you just hold. All right. That's. And by the way, in order to get these alerts, you have to hit subscribe on YouTube. Otherwise, you won't get them. And then if you like what you see, hit the like button and certainly refer to your buddies out there. This is, a free stock market analysis, and we're giving you the basement tapes where we're really sitting down around a kitchen table, giving you an idea of what's the best things to do on your trading portfolio. We're not in a bear market. We're in a bear market, so we're not in a situation to build up mutual funds for buy and hold. So these are just specific tradings. XLE is the next one. That's our energy ETF basket. Same story there. The daily is bounced up off on 200. The daily is not giving us the buy signal at all. Well, if you go to the 120, we're a little aggressive here on this. We're ahead. We should wait until the 9 crosses above the 14. So this may be short-lived, but you can see the MACD cross positive. The stochastic's way above 70. Energy moves really fast. If it goes, you're gonna get in, and it's gonna take off. The stop on that one, do I have a stop? If you get in it, put your stop at 71.28. You add a third on that one, and then UNG is our other one. These are high-risk plays now. Energy moves very rapidly, so it's like trading materials, gold, copper, those type of things. You don't want to risk your farm on it, right? UNG, 120-minute, exact same story as XLE, but it's natural gas. It's the U.S. natural gas. The daily, also the relative strength index on that, it was at 31. Today it's at 35, so it's definitely, and the daily is definitely in the oversold territory, right? XLE, I believe that was in the 20s, but let's double check. We had 29.59 and 30. Now it's crept up to 37. Definitely in the oversold territory. We're looking to play a bounce here. Let's, but keep get a screenshot, show you tight stops on that. All right, and we're trading off the 120. We'll see how that goes, and since it's an active trading position, we may be in and out pretty fast. Then we're going to minimize very tight losses. Okay, so if we do encounter the direction back downward on these stocks, TBT, TBF we should be added today. Add tomorrow. TBT is the 200. That's the inverse of the Barclays. This is I don't like this stock chart. I'm just going to come out and say it. What you tend to do is you pull back, and then it's not making an aggressive new high, and it's just a barely new high. Our stochastic's just starting to cross positive, but it's still down in the 40s, 30s, and MACD is not crossed. The green is crossed below the red, so it's not giving us a real positive signal, but it's closed above the 15 the other day. Now today it closed above the 9, so we want to start adding to that. And then our stop for that would be, since we are holding a third without a stop, you'd put the stop right below 27.25, 12 I would use. 27.2, 27.12. All right, and TBF is just a 1-to-1 versus the 2-to-1 on that. Same story there. Our watch energy for entries XLE, we're going to take a position UNG, we're going to take a position USO. At this, the United States oil, I'm going to take a pass on that at this point, but we'll take a look at it while we're here. The daily, definitely a positive indicator here, but it's being repelled by the 9. May go above that. We're getting some decent volume on that. The 120 is just touching, and there's a good chance that that's going to be a positive change for us. So we may be entering that soon. We'll take it one step at a time, okay? But this one also looks like a good mouse hunt for us. But we'll see where this bounce goes. So we've got some things happening. This probably bear market bounce could continue this holiday weekend and into the day after 4th of July weekend, but it's going to be slow trading because of low volume. And there is the fear of missing out because of that last day. So what's happening is a lot of people are going to jump in, and then there'll be a big downdraft. But one day at a time. Okay, that's our stock alert, XLF, ILF, XLE, UNG. Our stock table, we've got Verizon, it's up 2.95% on our last remaining third. We've got TBT, we're up 5.65. We took some gains at 3.5 and 4.6. TBF, that's the 1-to-1, same story there, just half of that percentage. PSQ, our last third we're holding is up 3.19. We took profits at 6.5, 7.9, and 7.2. And DOG, which is the inverse, the PSQ is the inverse of the NASDAQ QQQ, or the short side of the QQQ. DOG is the short side of the diamonds or the Dow. We're at 3.74 on our last 1/3 there. And then we took some gains for 4.6 and 6.5, 6.4. SH was the short of the SPY. We're at 16 to 4.7 on our last third, and a 6 and a 8% profits there. RWM, we're holding the 1/3. The RWM, we may be getting out of that. That is showing some health. Actually, I was looking at the Schwab small cap going long for a mouse hunt. But the 120 here, this doji candle, could it be an indicator or halfway market down? So this, we may be pulling the trigger to get out of that. CHHA is Schwab's long version of the small cap, and did pull back, but is still being repelled by the 15 or the 14 EMA, which are whenever you're using. But our inflection point is not kicked off. The MACD is just starting to go positive. Stochastic is climbing positive. Towards positive. If we look at the 120, if we were going to make that choice, it did make the crossover. So in theory, we should be taking a long position here if we were going to do a quick trade. And we may get that alert out tomorrow, but this has got some good positivity. Actually, I've got a buy-in for right around 39.86. So I'm not convinced yet on that, but we'll see. We may come and revisit that one. So as far as adding to your short position, let's just hold off and wait. There's many gaps that look like they might be filled. If there is continuation of this bear market bounce, we may get stopped out of our last third due to the inflection point. So I'm going to hold off. The target point for the NASDAQ's looking around 297 to 299. The SPY, the target looks 399 to 401 on this bounce. And the diamonds, it looks like it goes higher. It's 319 to potential 324. So, and the IWM, which is the long of the Russell, is 177, 188 target. So let's hold off before adding to these until we see a little more conviction of where we're going. And if the next several days go sideways, that'll be a good indicator that we should start add to these shorts. But we got plenty of time because we're holding our third. Advanced decline for today. No surprise, we are gaining, and this is the New York Stock Exchange. We haven't quite hit the 50 EMA. It's climbing towards that. The relative strength index is climbing it up to 50. So we've got some, definitely came off the bottom. Expect the bounce to continue. Most likely up into that 50 EMA, then we could probably see the shorting side take it in effect again. So we've got a little bit of positivity showing on the advanced decline. Again, I don't like to use the day-to-day, but we're using it as a reference because we want to keep an idea of what the running total is during the weekly. We talked about the legends of bear markets last time. We talked about where the targets are if this bear market continues. So that's in previous segments, and then also the Nasdaq. We've shown you the bear market table and the average bear markets. So that's it for this alert. Let's try these couple of these trades. Keep your stops tight, and if they go in our favor, we'll get a little bit of a bounce. We'll ride this bounce. It's always hard because if this becomes a bear market rally that adds 10 or 15%, you say to yourself, geez, I could have got a nice hit. Well, it is if you bought at the low of that. If you had kept positions and you held on and it came back 10 or 15%, you're not getting 10 or 15, you're getting a smaller percent, right? Because if you had $100 and the market goes up 10%, you're at 110. If the market goes down 10%, you're down $11, right? And you're at 99. If it goes down 10%, you lose another 9.9 or $10, and you're at 89. So, and then if the market goes up 10%, you're at 8.9 or on top of the 89, so you're at 98, whatever. So you're not quite getting back to that 110, right? That's the decay factor. Keep that in mind. But it's the fear. We all have this fear we're going to miss this rally. So low volume markets tend to favor the direction of where the market is going at this particular given moment. We'll see. Tomorrow, if you wake up and the market's down 350 points at the open, just wait. Don't go into our quick mouse on trades, and you may not even want to add to the horizon, but you probably want to add to the TBT, TBF. All right, that's it for the Twomey Stock Market Report. Today is Monday, 6/27. Have a great remainder of the day.